Something just happened inside the most closely watched silver market on Earth, and almost nobody is talking about it. We're not dealing with a rumor. We're not dealing with speculation. The actual data, the cold, hard numbers coming straight out of COMEX, just flipped in a way that professional traders, hedge funds, and silver analysts have been watching for months. And when I say flipped, I mean the kind of shift that historically shows up right before something massive happens to the price of silver. Now, here's the part that's going to make you want to stay until the very end of this video. The people who were supposed to benefit from this move being hidden, they didn't want you to see this. This data was tucked inside a report that most retail investors never bother to read. But today, we're pulling it apart, line by line. And by the time this video is over, you are going to understand exactly what just changed, why it matters, and what it could mean for your financial future. So take a breath, get comfortable. Because what I'm about to walk you through could be one of the most important things you watch this entire year. Let's go back about 72 hours. The Commitments of Traders report, what insiders call the COT report, was released by the CFTC. Now most people glance at headlines, maybe scroll through a few tweets and move on. But a small group of serious market watchers dug into the raw numbers, and what they found stopped them cold. The commercial traders, the big banks, the institutions, the so-called smart money, had made a dramatic move in their silver positioning. Their net short position, which had been climbing for weeks in a pattern that historically signals price suppression, suddenly collapsed. And on the other side of that trade, the managed money category, hedge funds, large speculators, flipped heavily to the long side in a single reporting week. This doesn't happen by accident. This doesn't happen quietly. And this absolutely does not happen without meaning something significant. Now, before we go any further, if you are finding this valuable, do yourself a favor right now. Hit that like button and subscribe to John AG 1.0. I put out research-based content on precious metals, market data, and financial movements that the mainstream media consistently ignores. Thousands of people are already watching this channel for exactly this kind of deep analysis, and I don't want you to miss what's coming next. Hit subscribe. It takes 2 seconds, and it could genuinely change how you see the financial world. Now back to the story, because it only gets more interesting from here. To understand why this COMEX data flip is such a big deal, you have to understand how this game has been played for a long time. The silver market is not like the stock market. It is not purely driven by supply and demand the way a lot of people assume. For decades, a relatively small number of large financial institutions have held enormous concentrated short positions on silver futures at COMEX. What that means in plain English is that these entities were essentially betting, sometimes with breathtaking size, that silver prices would go down or stay flat. And because of the leverage involved in futures contracts, these positions had enormous influence on the price you saw on the screen every single day. Physical silver in your hand, silver jewelry, silver used in solar panels and semiconductors, all of it priced against a futures market that was being leaned on heavily from the short side. That was the game. That was the system. And then something started to change. It started subtly, the way most major shifts do. Industrial demand for silver began climbing in ways the models didn't fully anticipate. The green energy transition, solar panels, electric vehicles, battery technology, all of it requires silver, and not small amounts. A single solar panel uses roughly 20 grams of silver, and the world is now installing solar at a pace that would have seemed like science fiction just a decade ago. At the same time, silver mining supply has been stagnant. New discoveries are expensive, existing mines are aging. The math of supply and demand was already quietly building pressure underneath the surface of a market that the short sellers were working hard to keep capped. But here's where it gets really fascinating. When pressure builds in any system long enough, whether it's in nature, in engineering, or in financial markets, and at some point, the structure can no longer hold. And the COT data we just saw suggests we may be watching that moment begin to unfold in real time. The commercial short position, the very mechanism that has historically been used to contain silver prices, just got dramatically reduced in a single week. We're talking about a reduction in the magnitude that analysts typically associate with major trend changes. The entities that were short silver, the ones who profit when silver goes nowhere or goes down, are covering those shorts. They are buying back their positions, and when the biggest short sellers in the world start buying, you need to pay very close attention. Now let me tell you what the numbers actually showed, because specifics matter here. In the most recent COT report, the commercial net short position in silver futures fell by one of the sharpest weekly amounts recorded in recent memory. Meanwhile, open interest in silver futures overall remained elevated, which tells you this wasn't just a quiet exit. New money was simultaneously entering the long side of this market. Managed money, hedge funds, and large speculators increased their net long exposure significantly in the same week. What you have is a situation where the shorts are covering and the longs are loading up at the same time. In technical trading, there is a term for what happens to price when that dynamic fully plays out. It's called a short squeeze. And in the silver market, given the historically concentrated nature of those short positions, the potential scale of a true silver short squeeze is something that has been discussed in precious metal circles for years. Think about what this means for a moment. If you have been holding physical silver or silver mining stocks, or a silver ETF, the environment you've been sitting through, the sideways price action, the frustrating suppression, the moments where silver should have rallied and didn't, that environment was not random. It was the weight of those short positions pressing down on the market, and now that weight appears to be lifting, not all at once, not overnight. Markets rarely work that cleanly, but the directional shift in the data is unmistakable, and the people who understand what COT data means are watching very carefully right now. There's one more layer to this story that I think is critically important, and it's something most YouTube channels aren't going to discuss with you. The COMEX warehouse silver inventory numbers have also been showing unusual movement in recent weeks. Registered silver, the silver that is actually available for delivery against futures contracts, has been declining. This matters because one of the backstops that keeps paper silver prices anchored to reality is the ability to actually deliver physical metal when a contract demands it. When registered inventory falls while open interest in futures remains high, you have a ratio that gets tighter and tighter. At some point, that ratio tells you that not everyone holding a long futures position can actually receive physical silver if they demand delivery. That is a structural vulnerability in the market, and it doesn't resolve itself quietly. Put these three things together: the dramatic reduction in commercial short positions, the surge in managed money-long exposure, and the falling registered silver inventory at COMEX, and you have a picture that is genuinely remarkable. Each of these factors on its own would be worth paying attention to. All three happening simultaneously in the same reporting period is the kind of convergence that gets circled in red by serious market analysts. This is not noise. This is signal. Now, I want to be honest with you because this channel is built on straight talk. Nothing in the financial markets is guaranteed. No data flip, no matter how dramatic, comes with a promise attached. Markets can remain irrational longer than anyone expects, and there are forces in this world with enormous resources dedicated to managing narratives and maintaining the status quo around silver pricing. Anyone telling you they know exactly when silver is going to explode in price is either lying or guessing. What I can tell you, and what the data supports, is that the structure of this market looks fundamentally different today than it did even 60 days ago. The conditions that would need to be in place for a significant silver price move are aligning in a way that deserves serious attention. If you are someone who owns physical silver, this is a moment to understand what you're holding and why it may matter more than the current spot price suggests. If you are someone who has been on the fence about silver, understanding the mechanics of what just happened at COMEX should inform how you think about this asset going forward. And if you are simply someone who wants to understand how the real financial world works beneath the headlines, welcome. This is exactly the kind of content this channel exists to provide. Before I let you go, I genuinely want to hear from you. Drop a comment below and tell me, are you already holding silver, or are you watching this from the sidelines wondering whether to get in? I read every single comment on this channel, and your perspective matters not just to me, but to everyone in this community who is trying to make sense of these markets. And if you know someone, a friend, a family member, a coworker, who has been asking questions about silver or precious metals lately, do them a favor and share this video with them right now. The information in this analysis is the kind of thing that doesn't show up in mainstream financial media. And sharing it is how we get it to the people who need it most. The data flipped, the smart money moved, and now you know exactly what happened and why it was not supposed to happen this quietly. Stay sharp, stay informed, and I'll see you in the next one.